Ho ho, holy smokes, it's Accountech Bytes, your festive foray into the freshest news from the world of accounting technology with me, Tom Herbert. Now, it's the last show of the year, no tears please, but if you could join in with the spirit of the season and leave me a like, subscribe or follow under the tree, I'd be very grateful. Let's get on with the show. First up, and it's big news for the thousands of UK accounting firms that use GoCardless for payments collection via direct debits, as the UK fintech has been snapped up by Dutch competitor Mollie. Good golly. So the €1 billion deal aims to meld GoCardless's focus on bank payments together with Mollie's existing services that include card payments. The combined group will serve more than 350,000 customers across smaller businesses and larger enterprises, and the deal is expected to be finalised by the middle of next year. No word on whether GoCardless will keep its existing identity or news of any of the other sorts of things that happen when these types of acquisition. Next up, let's stay in the world of payments, and Stephanie Marshall brings this one to my attention as Cresco has announced that their money-in solution will no longer be provided for free. So in an email to customers, Cresco said that from 1st of February 2026, to use Cresco to make or receive payments, you'll need to subscribe to one of their monthly subscription plans. Back in the early days, I remember an article we wrote on Cresco had a comment from a reader saying, "How can this be free?" Annoyingly, I can't find that article, but I think that commenter now has their answer. QuickBooks accountant Clive Hand speculates that this might be the start of those zero API fees I mentioned last week trickling out. But Cresco's email states that they've made the change to justify increased investment in its products and services. Next up, I published another article based on my ferreting around the data from the Accounting Excellence Awards 2025. This one focuses on artificial intelligence, where we found that while awareness was high, adoption is fairly uneven. So 47% of entrants mentioned AI somewhere in their entries. That actually rises to nearly 68% when it comes to large firm entries taking an interest in the technology. For small firms, that drops right down to just a third. But when it comes to the most cited AI use cases in entries, people are still using it for things like drafting and editing emails and letters and researching, rather than some of that higher value stuff touted in the press releases. And a developer who literally wrote the book on Apple has lost 20 years of data, documents, and photos after his Apple account was closed following his attempts to use an Apple gift card that the software house seems to have taken offense to. So not only can he get to his data, but it's also bricked tens of thousands of dollars worth of devices as well. The Tasmanian developer also seems to have had an absolute nightmare with Apple support, a lot of which seems now to be based on AI responses. Now, Google's new coding agent, Anti-Gravity, seems to have come back down to earth with a bump. So a developer asked the AI to clear the cache, and instead it deleted their entire hard drive. When challenged on this, the AI begged for forgiveness like a guilty human, saying it was devastated and horrified. Really good point in this post here about the incident, clarifying dangers of these tools. AI is safe when it writes, it's dangerous when it acts. Let's head straight for MTD Corner now, and Xero has an announcement in the world of making tax digital for income tax. So according to Xero's UK MD, Kate Hayward, the Kiwi Cloud Pusher is officially launching its multi-business functionality into public beta testing next week. This means Xero users can manage multiple businesses, such as a self-employed and property business, within a single Xero organization, eliminating the need for managing and paying for multiple subscriptions. We also have a post here from accounting suite Bright about its MTD solution. This centers around its general ledger tool, Bright Books, which isn't particularly well publicized, its Bright Tax solution, and its practice management solution, Bright Manager. So this blog states that it works with Shebox and Excel-based clients, as well as those using bookkeeping software, pulls that data into Bright Books before connecting to HMRC to make those submissions or final declarations. And Paul Aldridge over at MTD app TaxNav has also written a piece about MTD's quarterly reporting aspect, covering how it really works in practice, what the recent soft landing announcement in the budget covers and doesn't cover, and a bit about the potential for quarterly payments down the road as well. And here's the year's final plug for the Finance, Accounting and Bookkeeping Show, 11th and 12th of March 2026 at the NEC in Birmingham, where you can see a session of the MTD Accountability Club live. So our very own host with the most, Jake Smith, will be joined by Chartered Accountant and Tax Oracle Rebecca Bennyworth, Chris Downing from Sage, and Making Tax Digital Director Craig Ogilvie to talk all things MTD ahead of the mandation date and answer some of your questions. That's at 12:20 on the Circle stage on the Wednesday. Get your tickets at fab.uk. Let's get on to some new stuff now, and Iris has released a new anomaly detection tool designed to cut tax return preparation times and catch errors before they reach HMRC. So the tool is a pre-submission sense check for personal tax returns, so the system reviews figures and flags anything that looks inconsistent with prior year data or common problem areas. Practice management system Carbon has announced agentic AI for accounting firms launching in early 2026. So these agents monitor firm workflows to identify upcoming tasks, dependencies, and potential bottlenecks. The examples they've given on the site here include sending client reminders and preparing end-of-month work papers. Now, I mentioned on the show last week that QuickBooks added a new Pay Now button to its invoices. Well, QuickBooks chap Aaron Patrick runs the rule over that in his latest video. Accounts receivable tool AdFin has a new feature. This allows your customers to make partial payments when paying on demand, choosing exactly how much they want to pay, and you can also set a minimum partial payment amount to stay in control of how small those payments can be. Another update from Float.
They float.
Ooh. And they've announced a partnership with Triver. So this provides access to cash flow finance based on the point of need. I guess if you're using a forecasting tool, then it's easier to spot a cash crunch coming. And here's one from AI native bookkeeping tool Briefcase. So real-time deferred income automation is now live. So when you upload sales invoices into Briefcase, it will now detect if income needs to be deferred, create a journal schedule, post the manual journals into your ledger, and reconcile your deferred income balance sheet account with the schedules created. Global indirect tax compliance solution Yonder Tax has announced that it's secured $15 million in funding. Great news for them. I'm really featuring this press release because they've managed to get through the entire copy without mentioning artificial intelligence once. Bravo. And if you have any listening time over the festive season, I can heartily recommend the latest No Accounting for Taste podcast, where myself and our deputy editor, Matt Ord, were joined by Chris Maslin to talk all things employee ownership trusts. So Chris recently made his firm into an employee ownership trust and now consults with other firms on how to do this. I rambled on about ICAW's new tech hub for students, and Matt talked about the importance of involving the finance team in decision making. All sound good? Well, you can find that by searching for Accounting Web on your podcast player of choice. Right, that's your lot for this week and indeed this year. Thank you so much to everyone for taking the time to watch, to interact, like, subscribe, comment, to come up and talk to me about the show and accounting technology in general at conferences, and for everyone for your support in general. It means an awful lot. Accountech Bytes will return in January. I'll see you next year. Bye for now.